Hello and welcome to the paid weekly recap for the week ending August 8th, 2025. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictures Vlad Karpel, the CEO and founder of Yellow Tunnel, and the creator of the artificial intelligence behind the predictive AI for dynamic market system. Before we get into our recap for the past week, normal disclosures, options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. If you do have questions about your personal financial situation, please consult with a registered financial advisor. The information in this presentation is for education and information purposes only and should not be considered trade advice. And finally, myself and/or the team at Yellow Tunnel may have a financial interest in the securities presented and the trade ideas. If you do have further need to read through some of these disclosures, please go ahead and pause the video here. Otherwise, we'll get into the recap for this week. So as we shifted through the week, we had the big pullback on Friday after non-farm payrolls data and some continuation of tariffs and some concern over where the economy was really headed. Throughout this week, we actually had a bounce back in the 10-year yield as some confidence in the U.S. economy seemed to be going the positive direction here. Broadly speaking, that bounce back in the 10-year yield was paired with a bounce back in the S&P 500. So Friday, we made the lows. Monday, we bounced back. Tuesday, we fade. Wednesday, we bounce back. Thursday, we attempt to push through and then fade. Friday, we pushed all the way up near a breakout to new all-time highs in spite of not having full clarification on all this tariff stuff, in spite of not having full clarification on the U.S. economy. At the end of the day, it seems like this market is being trained that every dip is a buying opportunity and we need to be as dismissive as possible to any news that could even be remotely considered bearish, because that's what's working. Back in April, when tariffs seemed at their worst, was one of the better buying opportunities we've seen in years. As we now are approaching new all-time highs, there should be some strong overhead resistance, but the market isn't necessarily saying that it's going to hold. And the prime example of this is in tech. Tech made a new all-time high on Friday. Now, if we continue through that, this could be an interesting week for a full breakout into a bull trend for global markets. However, I'm not 100% sold yet. We'll see how this week starts. If we fade back and reject that new high, it tells me that that profit-taking desire at the previous highs is still there, and that this market's not quite ready to go bull mode fully, that we need to get a fundamental input that really drives greater confidence. Now, Apple this week had a great run, and that really does help out tech being a large portion of QQQ, being that it's market cap weighted instead of an equal weighted index. Overall, tech growth does tend to lead to speculation and confidence in a overall bull market. So seeing tech leading is generally considered a bullish sign, but I'm still a little leery of committing to it personally, given the fact that we seem to still have these same overhangs that we had a week and a half ago, and now we just don't have the price depreciation to go with it. We've simply erased the price depreciation without necessarily resolving the fundamental questions. Now, small caps, they continue to lag. And this seems actually to be the most logical sector out there. So between the three main ETFs, the S&P 500, the NASDAQ, and small cap seems to be performing the most logically, at least over the last week, in that we bounced back to the middle of the range, not over to a new high for the last 6 months, which was actually made 6 months ago, or even a new high over the last few weeks. We're trading in the middle of the range, showing that there is still some concern for the economy, still some concern over certain sectors. And remember that the Russell 2000 does have a large portion in a couple of main sectors. The two that I really focus on are financials and healthcare. Industrial is another big sector for the small caps. And healthcare continues to lag. Stocks like United Healthcare, Eli Lilly had very weak earnings, and that's a drag on the overall small cap portfolio. When you see healthcare stocks such as these lagging, that healthcare sector has a difficult time rallying. When financials aren't making new highs, it helps, or it prevents us from offsetting that by making a new high over the last 6 months. And keep in mind that the previous all-time high was not made in the last 6 months for the Russell 2000. It was made about 8 months ago, 9 months ago. And so we do have a bit of room here before we get to a new all-time high. We need a little over 10% rally in small caps to get to that point. Now, is that undervalued, overvalued, correctly valued? I don't know. We have to just go off of what the market says, but it does mean that we're not buying everything yet. And that does lead to opportunity for selective stock choices. On top of that, we've got the VIX back down to 15. Now, the VIX seemed too high when we were at 15 a week and a half ago. The VIX feels a little bit low, absent the fact that we're trading at highs. Because that uncertainty is still there, I would have thought that there would have been a greater desire to hedge and or reduce long positioning, but instead, it seems like the market is going into a spot where we're selling out of the money calls. Investors are selling out of the money calls to finance the hedge of buying a put. Effectively saying, well, we may continue to go up, but I'm okay with selling my stock if we go up 5 or 10% from here. But I need to have that protection in case we have a 5 or 10% dip. So if I can do that at a cheap cash outlay to have my hedge and then sell out some of the upside, that can be a comfortable position. And that seems to be the focus for the market as they drove towards the hedge side of things when we were getting ready for that dip on non-farm payrolls and even further on Friday, and now seem to be focused on the financing of that hedge as we get closer to highs. This is going to set up great opportunities for paid in the near future if it holds. So if we go into that bull market, paid ideas really start to work well because we've got a whole tailwind from the broad market pushing this whole market higher. And then individual stocks can follow. Maybe we can finally break out of some of this chop. For this week, the one trade idea we had was in Verizon, and we maintained that chop. We didn't quite push through. We got close. Friday looked like maybe would be a takeoff spot. We started getting above the 100-day moving average. We started pressing against some of the recent highs. There wasn't enough follow through. So from entering on Tuesday morning until the close on Friday, we had a small 0.5% gain in the stock. Because the stock has had such a tight range and the VIX is dropping, the implied volatility in Verizon as well dropped by about 2% from 17 to 15. And that hits the options. So even though the price of the stock went a little bit higher, the risk premium in the options and the sellers of calls out there reduced the premium on a lot of these options, including the call options, and that actually led to a 14.5% loss on the call options due to that depreciation in implied volatility for the very small move to the upside. So unfortunately, that did lead to a loss here for us in spite of the rally in the stock. We'll look to see if in the coming weeks, some of these more leveraged directional biases can start to actually catch a trend here. But this week, Verizon certainly did not. Now, this upcoming week, we don't have any expected paid trades because of this chop and because of this non-committal to breaking out to a new all-time high. We don't have that conviction for this week in the AI models that the bull flow can and should continue. That confidence will be driven by the behavior this week. So if we can get that confidence this week and the market can actually show it, great. And if not, we'll be relieved that we're not in the long side after we reject the new highs. So it's a bit of a coin flip for this market. We'll see. Right now, it seems like the bulls are trying to take control, but they may fail to do so. And as we go through navigating what this week ahead, this great setup week for the following week, I do think that there's going to be some great opportunities that we're going to be discussing in the live trading room. So make sure you are keeping an eye on that because the results speak for themselves. Nearly a 10x return over the life of the live trading room trades. In about 5.5 years. That's a pretty solid return to see in any portfolio. So Jeff, definitely jump on. Vlad and I will talk through a number of ideas that we're seeing out there. So even though we don't have any paid ideas, there are certainly ideas out there, ways to make and leverage some returns for shorter term trades or for longer term trades, just not right now for the paid style of trade. So the paid style of trade certainly kicks in if we get a nice rally this week, may still kick in if we have a neutral market this week because of stock selectivity. But for this week in particular, just not fitting quite right for our normal high expected value trade opportunities. And since we don't have that high expected trade opportunity, cash is a better place to be for those trade styles. For the trade styles that we highlight in the live trading room, there are certainly opportunities out there. So make sure you're joining us and we can answer any questions you've got about the market behavior in general and how things are shaping up. And if you don't have time to join us in the live trading room or want to talk to us offline, feel free to email either of us. I'm Keith at yellowtunnel.com and Vlad is Vlad at yellowtunnel.com. Thanks again for being a valued paid subscriber. Looking forward to some great trades ahead. And please make sure you're joining us in that live trading room to discuss many opportunities that are out there for any trading style. Thanks again.